Good everyone, my name is Les, Chief Analyst of BG Trading Australia, and I hope you are well. Today is September 9th, 2024, and we're going to be analyzing ZIP once again, ASX code ZIP. It is a stock that we have been trading several times over the last few years, has been incredibly profitable for us. In fact, I don't like to say that, but I bought my Tesla Model Y out of this particular stock, believe it or not, with one single trade. The question is, we wanted to know whether we should be still holding this stock, which has growth substantially. If you look into the chart formation since October last year, so the last 12 months has rallied to the top. Now it has rallied about 632%, and we had a 14% correction. Let's understand how the macroeconomic outlook with Fed cutting rates, potentially RBA cutting rates in Australia as a result, could affect ZIP. Provided that at the moment, as I have been sharing with my VP members, we really wanted to be positioning ourselves into stocks that could directly benefit from interest rates cut. And when I'm talking about that, I'm saying from the fundamental aspect, how interest rate cut could benefit profitability of those stocks that we are looking at. And ZIP is one of them. If you watched my last video, I mentioned that for me, ZIP is a hold. Now let's take a look if it is still a hold, because the market changes considerably every single week, and we are heading towards a very volatile period, October and September, and that historically it tends not to be positive months for the stock market. So how can we still make money out of this? Or we should be leaving. Also, I will be taking a look at CETTIRE Limited, which the ASX code is CTT, another stock that we have been trading as well with our VP members, and KGN, which is a stock that I still think we could see a major rally out of that stock. And CETTIRE has been rallying quite considerably over the last week. And I think we could see some similar share price action in KGN. And I'm going to share the reasons why in this video. Let's have a look. Remember, this is not a financial advice. This is just us from BG Trading sharing with you how we apply a BGS 20 strategy together with our VP members to chase 20 to 40% profit with a very tight stop losses, trading small and mid-sized caps most of the time, sometimes large caps, and how set up target stop losses, how we avoid buying stocks at the FOMO area, which is one of the most common trading mistakes for people that don't have much experience. And much more. I'd like to invite you also to become a member of our free Facebook community, Buy, Grow, Sell Strategy for Share Trader. And also follow us on our Facebook page, BG Trading. We post a lot of great quality content, including some stock analysis, some of our results, and much more. All here in this community and in the channel. So please subscribe and share this video. Share this video with someone that you believe would be interested into this content. Now let's jump straight in ZIP, the last financial report for FY24. You will know that ZIP has become a profitable business for the first time in history. So essentially I would say that ZIP is in the best fundamental position that it has ever been, even before the hype, the buy now pay later hype that led ZIP all the way to $14 a share. Would I be expecting ZIP to go back to $14? Not at this current context, but if we have a number of interest rate cuts in the US, we could see ZIP moving towards $5, $6, or even $10. I don't know, depending how much momentum we will see into this stock. But at the moment, let's be realistic. Let's trade into a narrow ranges, and obviously once the ZIP hits the targets that we have, then sell, wait for further correction, and then we buy again, or maybe we sell half and add it up again. This is all strategies that we discuss with our VP members. In fact, we have been trading ZIP since 38 cents. That's when we start our first trade over the last 12 months with ZIP, and some of the trades was 80%, another trade of 50%, well over 100% profit within the last 12 months. And we think we could keep going, as the chart formation shows that ZIP could continue to be in uptrend. So if you use BGS 20 strategy, what you want to display here is the Heikin-Ashi. Heikin-Ashi shows you the momentum and clears up any disturbance into the chart, and shows you the short-term momentum essentially. And you can see here how the green candle shows a positive momentum, and then the red candles a negative momentum. Green candles again, red candles. And if you see, people are selling at very high levels here, and buying back at the low levels, and sell again in the even higher levels, buying again in the lower levels, and that trend continues to show consistency. So it's still going. We saw this correction of 14% for ZIP, and this hypothetical support level as well, which suggests that in this level here, which is precisely around $2, we would see strong buying activity. So we haven't actually seen specifically ZIP falling and staying under $2. In fact, what we see here is every time ZIP's been falling around $2, it recovers back. Falls around $2, recovers back. And then fell around $2 here today and recovered back. Today actually was 205, which is essentially at the low $2, sort of speaking, which consistently endorses my suggestion that this is a strong buying activity for ZIP. And we're still trading at relatively low volumes on those during this downturn. Also, there has a slightly increase here. Today, ZIP's moving up again. I don't know if it's going to close up or not. But the overall context for a buy now, pay later company, obviously there's a lot of competition, some fears of further regulation, but ZIP is well positioned for that. And the fact that interest rate cut can directly impact its profit, then that puts ZIP still into one of those stocks in our bucket list that could directly benefit from interest rate cuts. Then you can argue, oh, but this has been already priced in. Yes, it has been priced in, and in normal situation I wouldn't be so positive, but with ZIP, the reason I like ZIP is because the company has managed to turn around its business into a profitable business. It's not a company that is still trading at a negative cash flow. It is a positive cash flow company with a lot of growth opportunity in US. It's in a mature market in Australia, New Zealand, but it's still growing. And I think because that, if buying the stock at technically discounted price, which is under this red line here, which is not the case now, I'm going to be just highlighting the fact that we're happy holding this stock for now. Then, but if it comes under this red line at technically discounted price, I think it is opportunity to add more. And as long as you are hedged against potential market crash in the US. And when I say hedged, there is a way to short the market. So part of the portfolio could be hedged in case the market goes down, the whole market in the US or in Australia or whatever. And even if ZIP goes down, so you're still offsetting the profit loss, which still in an incredible profitable position by hedging with using some ETF funds that we have been discussing this channel. Now, the relative strength index shows that ZIP could be right now be bouncing back and still be in ascendant trend here, which is exactly what we wanted to see for this particular trade. So for me, ZIP still positive, still a hold. There's nothing here that makes me think we should be looking at selling or locking profit. Obviously, if remember, this is not a financial advice, okay? But if I would need the money straight away for something, or I cannot risk holding a little bit longer, then I would be definitely locking in, collecting profit and running away. But at the moment I can hold. That's ZIP. Now let's move into a little bit more, at least now, exciting stock, which is CETTIRE Limited, CTT, up by 19% today. 19%. It looks like the short sellers, thanks goodness, because we are holding this stock as well. Short sellers are now closing their positions. Okay, because if you look at this after the financial report, which I came up and I mentioned that I was actually happy with the financial report and the fact that the management came up in a very conservative speech about the beauty business in China, as they rather than they could have come really excited talking about the business, how huge Chinese market is, blah blah blah, but they actually have been very conservative, saying that they are testing the market, and I actually like the approach, to be honest. Didn't overexcited the market, but if you start looking to the numbers, it is a profitable business. You will see the value. Now, from the technical perspective, as you can see, we see a clear double bottom formation right there. And this double bottom formation for traders and investors generally shows a change on the direction of the trend. We also saw this huge breakout on the downtrend, which happened a little while ago, I would say early August, about on 12th of August. And ever since there, we had this rally confirming that the breakout of this downtrend. Then we tested again as the report, FY24 report was released. And then after the report, we saw this strong buying activity, whether it's a short trading coverage or a true buying activity, still it's still unclear, but I would say it's a combination of both, and also directors buying back into this particular stock. So for me, it's clear it is a hold, in my opinion. It is still offering significant value from the technical aspect and the fundamental aspect, in my opinion. This is obviously for me, it's not a long-term investment. We don't invest long-term in the market, you know that. But provided that the stock still trading well below the SMA 250, the long-term moving average. Let's measure this. Still trading 30% below that, and for if CTT rallies back, will represent another 50% profit out of this. So it looks very feasible for me. Obviously, it's not gonna go in straight line. It may take 1 month or two, who knows? But and there will be some short selling activity. This gap still needs to be filled here around $2.25, and then by the time this gap fills, we might see a contraction on this long-term moving average towards $2.50 or something like this. Depends how long will take for the stock to actually move upwards towards the SMA 250. But the overall context for me, it's positive, because this stock is extremely undervalued in my opinion. Okay, but again, it's just my opinion, so you have to make your own due diligence make sure you understand where you are putting your money. Don't just buy stocks because people on the internet telling, oh, because this is good, blah blah blah. Make sure you understand the numbers, understand the growth perspective, how the macroeconomic will impact in this particular stock, and interest rate cuts in the US could benefit because this large part of this company's business is in US, and I was saying not just US but Chinese central bank also cutting rates a couple of months ago, and we might have another cut, the rate cut in China. I don't know. I can't consider it's gonna happen, but we might have as Chinese economy needs to a little bit more boost. Okay, so looks positive to me. Let's move now to Kogan, KGN. Kogan is a domestic retail stock, and if you look at the chart formation here, the report was pretty decent. The share price has bounced back from this long-term ascending resistance level now that has been broken as a result of multiple interest rates hikes and fears of recession in Australia and all those gloomy outlook for Australian economy. But Kogan has showed some compelling growth in profitability and share buybacks and paying dividends, which is pretty much what we wanted to see into a stock that we are trading. I'm not gonna say this is investment opportunity, it's just a trading opportunity. But now we have this a strong upside with a strong volume here, which I like it. And for me, it looks pretty constructive with this also similar double bottom formation here. Strong fundamentals, positive macroeconomic outlook, even though Australian economy is shrinking because multiple interest rates hikes over the last couple of years. However, remember, this has been priced in. The interest rates hikes has been priced in, and we had this huge 54% fall on the stock, not just the Kogan, but also most of retail stocks, including CETTIRE. Now, what I've been looking here is, again, looking where the SMA 250 is. We're seeing this stock test the 250 moving average, which is about $5.30 at the moment, and once it breaks out of there, potentially with more confirmation of RBA effectively cutting rates after Fed start cutting rates, which could be within the next 6 months. And remember, the market will be pricing stocks based on what the economy outlook will be within the 6 to 12 months. So it will be pricing in already. So obviously this stock has bottomed up. For me, it looks like we bottomed up here, as the outlook for interest rate hike has completely diminished, and even now we're really looking at interest rate cuts, and then obviously that's when we start having the bounce on the stock price. Macroeconomic outlook is critical for stocks like this. And again, interest rate cuts should directly benefit Kogan because consumer spending should increase. So retail stocks like this should directly benefit. The market will be pricing very, very soon. So you just gotta be careful. Could we have a recession before? Yeah, maybe if we have a recession, we could see a short-term sell-off pressure. But I think those stocks could directly benefit from interest rate cut, could hold pretty well, especially those with relatively improved fundamentals. I would say strong fundamentals because it is a profitable business and continues to increase its profitability. That brings us to the end of this video. Let us know what you think, and I'll see you in the next video. Bye.